Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 18, 2017. Recording a little late. I had some personal issues, but hopefully they have been resolved. Again, elite membership interest list is forming, so do sign up at MasterCharts Trading. There's a link there to sign up. I'm estimating to go live around September 18th, but this could be extended. I'm not 100% yet, but this could be a very interesting way of trading, and I'll show maybe an example later. Stocks moved lower, and with a break below August lows. IWM is oversold, but not bearish. We'll look at some of the sectors which are oversold and some that are holding up quite well. I think junk bonds have not yet signaled the end of the correction for stocks, and bonds are outperforming. So overall, there is a defensive tone. US dollars attempting to bottom, and as a result, I need to add gold here. Gold has been kind of, gold is at resistance basically. Gold at resistance. Oil pushed off an intermediate support, and breakout for natural gas around $3. Above $3 could mean a nice move higher. Okay, so let's start with S&P 500 ETF SPY. So here last week I was looking at this chart, and it was definitely oversold. Now what I was looking for is I was looking for signs of strong buying pressure, and this entire surge is one gap, 2, 3, 4 days. I just couldn't find it. I mean, the gap is really nice, and I was counting it as a definite sign of buying pressure, but that was about it. I was looking for something more. I was looking for some kind of consistent buying pressure, maybe something along the lines of what happened in March here. It didn't happen, so if you're a subscriber, then you would have noticed that I did not send any alerts out during this week as far as buying any stock funds. Well, more or less, right? Now we made a lower low relative to the August low here, so now we have a lower low. That's not a good sign. Additionally, this is a shooting star, so there is rejection. In other words, the sellers came in here and sold at these levels here at 248.90, and then the selling continued. So whoever was smart enough to short up here already sitting on a nice profit. Generally speaking, I think stocks are very much bullish, and bull market is alive and well. I think it will take quite a bit more selling to cause, well, at the very least, a small short-term support break. And the line in the sand here are the July lows. If we break below those, maybe we'll contemplate a low, move lower to May lows or even March lows. But until that happens, I would treat pretty much all conditions of being oversold, as in right now, as being an opportunity rather than a danger. S&P 500 on a weekly time frame. Yeah, relatively bearish candles here. Let me get rid of the pivot points so you can see it more clearly. So yeah, see, notice there's two candles here. Both have signs of rejection of higher prices and selling towards the end of the candlestick. So in other words, these are quite bearish candles. The opposite of those would be the bullish candle, kind of like this right here, where you have the opposite signs. You have a signs of buying at lower levels, rejection of lower prices, and pushing of prices higher. So it's diametrically opposite candle here. So that's not good news for stock bulls. I'm a stock bull, but then on the opposite, flip side of this whole thing, we're getting oversold conditions, so potentially we could see, basically I'm treating this as a setup to add to my open positions or open new longs. Same more or less for QQQ. It's held up slightly better, but this is a lower low relatively to mid-August low. Again, overall, stocks and QQQ in particular also quite bullish. These are all-time highs here just 4 weeks ago. We had 4 red candles, sure, with signs of selling, but we had 4 red candles, for example, here in 2016 too, and then we made fresh highs. So I wouldn't read too much into it until we get like a support break below 185.80, but I wouldn't worry about until then. IWM, this is a Russell 2000 oversold, very much oversold. Now, I have already been hearing on Twitter, I'm active on Twitter, that some traders are already shorting IWM as if it flipped into a bear market. I think it's premature. I think this is still a bullish fund. Albeit it's more volatile than S&P, that doesn't mean that it is bearish. It's definitely 100% without a doubt oversold. So I would be looking for a bottoming pattern for this one. Here's IWM on a weekly time frame, and this is a 52-week channel. In other words, this is a 52-week highs here. Yeah, we had 4 weeks of strong selling. Compared to QQQ, where the selling was quite muted, but also 4 weeks of selling nevertheless. I would say that until we get to like 124, I wouldn't even consider it being in anything but the bull market. Also notice that correlation between the IWM and S&P 500 is pretty much 100%. I mean, it's like 80%, 79% right now. But overall, it's very high. So whatever is S&P doing, IWM will also do. And I think S&P is in a bull market. NYA, New York Stock Exchange Composite, also, well, you can't really trade it, but for informational purposes, this is good because it's a broad index. Fresh all-time highs right here, and then a pullback. Yeah, normal pullback. As far as long-term measures, advanced decline volume, both recently hit fresh highs right there, less in August, in fact. So I again would not contemplate a bear market just yet. There needs to be a significant deterioration in the various market breadth, and also we need at least some support breaks. Right, let's look at the sector funds. XLF financials, all-time highs again, so definitely bullish fund, and now a pullback. I think this is already oversold enough, and I would be looking to go long actually. Same goes for XLY, oversold enough. I mean, yeah, we closed below the recent low, but maybe this is one of those market maker maneuvers. This happens all the time. So market makers would push the price below the obvious support level, and then they would, rally. The stock would rally from there. So yeah, for me this is already oversold. XLI also already significantly oversold. Not terribly, but enough. XLV also oversold. Yeah, I would be looking to buy this one. Sure, we're getting a little bit of a shift towards defensive sectors. For example, here's XLP. This is consumer staples. Notice that XLP started rallying in July and it continued to move higher. Whereas S&P 500 here, well, it sort of followed, XLP sort of followed S&P 500, but notice that on this latest sell-off, the sell-off was quite muted, and now we're moving higher with XLP. So XLP, consumer staples, it's a more of a defensive fund, and it is understandable. In times of stress, and apparently there's stress going on from all the uncertainty in the world, especially with North Korea, so that investors are shifting towards a bit of a defensive posture. Now, here's XLU, and these are also fresh record highs just on Friday. So, looking at XLU, yes, XLU is definitely, utilities are definitely defensive sector. But quite often I've seen that a new leg higher is initiated by utilities. I know it's really counterintuitive, but it does happen on occasion, and actually quite often. Most of the time, or quite often again, is that you have like an offensive sector, like for example, technology or industrials would move first to the fresh highs, and then the rest of the market follow. But also utilities do break out occasionally to fresh highs first. So maybe this breakout to fresh all-time highs is already a sign that the rest of the market, for example, industrial, like I said, XLY, consumer discretionary, and then financials will also follow higher. Now, if that happens, I'm willing to bet that S&P will also continue higher. So again, we're oversold and we are definitely ripe for a bounce. IYR real estate, notice also that real estate corrected a little bit in August, but not significantly compared to some other funds. So again, overall, I think S&P is bullish, and we should not. I don't think it's time to short it yet. Okay, let's move on to bonds. So first, I want to look at junk bonds, and junk bonds I kind of equate with stocks, and I think that actually sometimes they give really good signals. You can sometimes time the stock market using junk bonds. Not always, obviously. There's nothing is 100% in this business. But here I was watching the price action over the past 2 weeks, and I realized that again, just like with stocks, I don't see a lot of buying at these levels here. So maybe they need to, junk bonds need to still do some correcting, maybe sideways, maybe somewhat down. But I don't see a lot of buying just yet. So we'll see where this goes. Junk bonds are at all-time highs, including dividends. So here we have a weekly time frame chart with a weekly shooting star candlestick, which was confirmed by the next week's red candle. Now this week we gained slightly, and we have like an inside week kind of thing. If we have a inside week, we could see a strong breakout either way. And I have just a really weird hunch that this breakout will be to the downside, although I could be completely wrong. Over the past 3 weeks, S&P 500 underperformed the TLT, which is a treasury bond fund, which is pretty much the safest, perceived as the safest investment, on earth, I guess. And this is showing again a little bit of a flight to safety and less appetite for risk. And so just like I said, with utilities and consumer staples and real estate holding up quite well versus the more volatile and more aggressive funds. The defensive sector right now, sectors and including the bonds, especially treasuries, are holding up better, and this is showing less appetite for risk and more appetite for safety. Here's TLT on the daily time frame. Very nice looking hollow black candles. Look at this nice, beautiful move higher from deeply oversold levels, as I have pointed them out in my previous videos. Obviously, if you sign up for MasterCharts Trading, I send out the actual alerts of where I would be comfortable entering or exiting. And quite often, not always, I take positions as well. The reason why not always is because I follow quite a bit of funds, and I can't take position in every single one of them because I would just not have enough money, basically. TLT on a weekly time frame, so nice move of the lows from 2016. I think this bearish engulfing has more or less been negated. Of course, it's possible we'll get into resistance at 128.03 again, but also possible maybe we gap above that resistance and continue higher. And this happens also quite often. For example, there's a gap right there, and there's a partial gap right there. So overall, again, there is a bit of a safety, applied to safety currently on the Wall Street. Okay, let's move on to the Forex universe. US dollar in the daily time frame. A couple of support breaks here. Another minor support break right there in June, and they move to fresh 52-week lows. Now we're seeing a bounce here, an attempted bounce. That's hard to see where it's going right now. We're at the logical support levels from previous 2015 and 2016 lows, so it is a very logical thing that we might bounce here. Of course, it's also possible that we don't, and we just continue lower. But I think it actually kind of makes sense for US dollar to retest like 96 point level, because this is a support break. This is a major support break below November lows here, 2016 November lows. Maybe what it will do, it will come up here and retest this level. It could fail here, or it could not fail and continue higher. At this point of the game, it's kind of difficult to say where this is going actually. Up to, say, the November support break, I was more leaning towards the bullish camp, but now I am not as bullish as I was just a few weeks ago. US dollar versus Japanese yen, so think opposite. US dollar to the upside would be winning this battle, and when this security moves lower, the Japanese yen will be winning this battle. So lately the Japanese yen has been winning the battle, and the dollar was under pressure. Now we came to this previous support levels, previous lows from a few weeks ago, 108.87, and there's another low at 108.11. So there is now most likely going to be some sort of a bottoming pattern, and again we could either break down or break out from it. If we break down from here, that means the dollar will come under further pressure because the yen will be gaining. Euro versus US dollar, big move here. Just want to recap what happened here so in the beginning of 2017 I pointed out this bottoming pattern here, bottoming action, but I wasn't sure if we have indeed reversed. Yeah, but it did look indeed like a bottoming action. We had a bounce, pullback, bounce, pullback, and finally a breakout with a gap. So this gap was like a giveaway that we see, okay, we went follow through with a breakout, and we continued higher, and then we broke out above really major resistance from previous 15 highs at 1.1711, and notice we closed above them, and so far we've been able to close above those levels, which is actually great news for the euro, but terrible news for the dollar. So again, if the euro kind of just bounces sideways and then continues higher, dollar will come under pressure, and as we will see soon, it will help gold. Okay, let's move on to gold. Here's gold, and this is looks like a very concerning shooting star candlestick. Notice where it went. It went around 1300. We had previous two peaks here at 1297, 1298. Went slightly above it, and so far this looks like a stiff rejection candle. So where is this gonna go? Good question. Here's GLD on the daily time frame. I've shown this chart in the past, but again, I want to recap why am I concerned about this chart. We had a support break back in October of 16, a drop, an attempted rally which was stopped short exactly at the support break, and then the collapse. Then we were rising this wave-like patterns. One rejection here at 123, move lower. Another rejection here at 123, another move lower. Now we're again at the same exact level. So now, like I said, it's possible that the dollar will come under further pressure. So ideally, I would like to see this resistance be taken out with a gap above it. Now, this is an ideal world, and obviously, it doesn't always happen. Here's gold in the weekly time frame. Again, I'm pointing out this resistance here in the $1,300 area. I think if we clear this resistance, we can easily make fresh 52-week highs. Here's GDX in the daily time frame. Very choppy sideways, mostly sideways action. Finally, we're kind of getting above the 200-day. The 50-day moving average is still below the 200, so we kind of need to move higher still, and it's just not happening. Market breadth is not great. Notice there's a little bit of a bearish divergence. So you see this low here, minus 3682. It's below this previous low from August. So that means that the market breadth currently is already below the August low, and notice that we moved higher in the index. So this is a clear bearish divergence. In fact, let me show it to you on a different chart. Here's GDX again. I wanted to point out this move higher from the August lows. And here's my custom indicator, intermediate term breadth momentum oscillator, which is basically an oscillator of the advanced decline line. Notice that it's been moving steadily lower, and this index has been moving steadily higher. So again, it's a bearish divergence. Where is it gonna go? Well, it's possible we'll move lower. This is a significant divergence, yeah. So finally, a weekly time frame GDX. I think this area here around 25, but at least we need to get up around 24 bucks to consider, fresh highs. It's just been really tough, kind of just going back and forth here, and without a big obvious trend. Okay, let's move on to the hard commodities. Here's oil in the daily time frame. So when I sent my subscribers at MasterChartsTrading.com like an alert saying that I'm waiting basically for a very overbought condition, and this overbought condition definitely manifested. But then I was waiting for a bear trigger. And I'm waiting, and I'm like, we're already here. And then one of the subscribers asks me, are we too late to enter? And I'm not sure, because I just don't see what I was looking for. I was looking for strong selling, and I don't see it. I only see like a little bit of selling, and then a little bit of buying, a little bit of selling. So finally, we got this Thursday, looks like a hammer candlestick. And then we had this huge follow-through on Friday, and I'm telling myself, then I guess that's a good thing I did not enter on the short side, because again, I just did not feel like there was enough selling to warrant a short entry. So again, no positions right now in oil. The reason why I don't want to be playing it on the upside is because I think oil is bearish long term, so I would rather short it. Finally, here's natural gas on a daily time frame. Last week we had a nice surge here. This week we're kind of correcting. So on a weekly time frame, Yeah, with the big surge, I was hoping for a follow through, but so far we haven't gotten it yet. So natural guess. I think if we get above $3 here, we could continue higher, but it's a tough chart right now, honestly. I would still not short it. I would be buying it on the long side. All right, that's it for this week's recap. Please hit the like button. I'm basically not making any money off of this, but a like from you would mean a lot to me. If you have any comments, questions, ideas, comment below. And of course, share this video with others who might benefit from it. Thanks a lot and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.